Okay, guys, let's do a recap. Another beautiful trading day. We had a great trading day yesterday. It all started with the roadmap. Now, if you didn't play today's video, at 8:30 this morning. We went over this exact scenario of where the market should go and where the target would be in the markets. So we'll go over exactly where this liquidity grab zone was, and we'll go over how we approach this. So play the first video we did this morning at 8:30. This is our plan this morning. I drew this up on the roadmap. Yesterday, we had a plan to short the first retracement up into the POC, or the first liquidity grab, and our target was down here at 8:30. It hit the target. Well, today we reviewed at 8:30 this morning that this level was tested several times. And we know that if market profile levels are tested several times, this would be the 1, 2, 3, the fourth time if it comes down to it. We should cut right through it like butter and move our way down to the next POC, or the next control point. Well, the setup came here. So this is where the breakdown was. If you replay the first video, we said this level would be the breakdown if it would break down in the market today. Would be right there. Right there, that break. And in the first video I said this morning, I said that if it breaks down through this level, we have an open gap in the market from 70, 13 and 3/4. You can replay that video. I said that exact S&P number, 70, 13 and 3/4 was the exact number I gave in the first video at 8:30 this morning. Right now it's 10:08. And I said that we'd have a big gap in the market where there's no support until we come down to yesterday's low of 86.5. And if you recall, that is yesterday's target that I said at 8:30 in the morning would be if we have a liquidity grab sell, which we did. I went over that in this morning's video. Big target. Well, we had another big target today too. These big gaps in the market provide opportunity. This is our roadmap. This is the market profile. This is all the participants in the market. And we said if it broke down below 70, 13 and 3/4, that we'd have no resistance, or no support, until 86 and 3/4. Now, the beautiful thing about the next level is I also talked about in the first video this morning at 8:30, that it tested 1, 2, 3 times. Typically, when any support or resistance with market profile, that if you test more than twice, the third time it likes to break. This is the fourth time. So the fourth time is that I said in the video this morning that if it breaks this level, 86 and 3/4, we should run down to the POC, which is 69 and 32 and 3/4. So 32 and 3/4 all the way from 87. So the first short was 13 and 3/4, was the big gap down target of 87. Now the second gap is 87 down to 33. The market's still trading right now. So the roadmap told us that we had some major gaps in the market to fill. And if we got into these tradable gaps, then we should see the market accelerate to the downside. So now it's just a matter of timing and getting into the market, which I'll show you in a second. If it would have broke out today, that's okay. We'll break out previous HVA. Then we'll see short covering, and we'll see all these buy stops get hit, and we'll see a possible big push to the upside. But it did not. It broke below the low value area. So what do? We go with the roadmap. Roadmap's been working since 1985 on price profile, that break right there at 13 and 3/4. And since 1994 on volume profile, which it broke at 70.19. So now the market's moving down and coming down to 33 1/4. Let's look at our other indicators I talked about this morning at 8:30, suggesting that this could be a nice short sell opportunity for the day. We talked about this chart, the bottom left. We said, hey, if we break this level low of 08, then if it turns red, what's the smart money trying to do? They're trying to sell liquidity. They're trying to short the market, so they're grabbing liquidity shorts. So they're pulling the market back, grabbing all the counter trend traders, and they're pushing the market. What's the push? It takes you half a nanosecond to realize these are red liquidity grab zones. So what's your bias? Short. So you can just look at this chart. So the roadmap told you we're on a major ledge in the market right here that I marked up at 8:30 this morning on the first video. I said 70, 13 3/4 is the major ledge where the market could fall off, go down to 80, that 87 level, 86 and a half, 87. And now the next major ledge is all the way down to the POC. Now, if you look down here, what are they doing? Are they selling or buying liquidity grabs? Shorting. I said if we broke this low in the first video, look for short liquidity, selling liquidity grabs. And we just got to be patient, wait for it to happen. We also said on this chart, the moving averages over here, look at the video. I said if we break this ledge right here, we're resting right on the 50-day moving average. I said we're resting right on the 50-day moving average, and consequently, at the same time, you're resting on the ledge. You're at low value area. Well, below the ledge is a big hole in the market below us, and there's a huge hole. So what's the market like to do? It likes to find fair value, and it just got crushed to the downside. But we knew this going into the trading day. Play the first video how we knew going into the trading day that if market profile broke, there's no market participation. There's big holes in the market with our market profile. And sure enough, it sure broke down. Now, how do we do it then? We got our big profile chart, our roadmap. Our roadmap told us we got two big ledges, big gap there, big gap there. We even got another big gap below here, the control point, if it can make it too. Big gap down to LVA. So we knew that if it broke, we're in a serious possible move out to the downside to fill the gap. We got our liquidity grab, bottom left chart, all red. You just got to see if it's red or green. If it's red, then we're looking for a possible liquidity grab shorts all the way down, right? And I said the specific level of 08, if it breaks below it, then we're looking for a possible liquidity grab short. So let's go to our timing. Our timing was excellent on our algorithm, picked it up. I said this morning, I said, here's a liquidity grab short. I mean, so it started out the day like this. Let's go ahead and show it. So here's how the day started out. And I said on the microphone, I said, listen, liquidity grab buy, there's a liquidity grab buy zone here and liquidity grab sell zone. Here's our sell zone going into the trading day, and here's our buy zone. So what the market was in, and I told traders this morning on the microphone, the market's in a channel. It's responding out of liquidity grab buy zone, and it's responding out of the liquidity grab sell zone. But it's never broke the line in the sand either direction. Never broke this high. It never broke this low. So I said, once we get outside of this envelope channel between these liquidity grab zones, the market is going to show a tell. So that's going to be the tell. The tell is going to be when we break out of that level. So once we break out that level, the market profile will create the opportunity for us. All right. At 927. So let's go back to 927. 927. 927 is right here. 927 right here. Right where this circle is at. Look what I wrote in the room. Let me repeat this in the room, and I'll put it in there down below. Repeat in the room. Here we go. Let me post it again. I post in the room. There it is. Said, the market will have to decide which way it wants to go. A break outside of the liquidity grab zones will be a tell. And that's exactly what it is, because we were inside a market profile. Well, here's the high of the liquidity grab zone. Here's the low. It broke the low of, that's when I put this in, that circle. Sure enough, it broke, and it told us this market's trying to break down right there. It's trying to break down. And sure enough, it got taken to the woodshed because we're in an opening tradable gap, below market profile, nothing holding us up. So what do? We look for a liquidity grab zone short. And sure enough, it came right up into my zone. Look at my beautiful zone. Right there it is. Zone. Came right inside of it. Now, it can't break outside of it by one candle. Remember, if it does, if it breaks outside of this candle by the candle, it's nullified. A lot of traders put their stops just outside. When you're talking about stop placement, in case it's wrong, they put it just outside of that zone. I have a lot of traders that like to do that. They put it just outside of that trading zone. So it reversed right into the zone. There's your first setup. Comes down, comes back up again, and gives us a what? If we get inside of my trend zone's red, it turns a yellow trigger entry, another entry. So here's a 10-point potential in the first push, and then here's 74.5 all the way down to 46 on that second push. And now look what it's doing again. Trying to work its way down to where? Where's it trying to work its way down to? 69.32 3/4. There you go. There's your trading plan. There's a ledge it broke. That's how you can use the liquidity grab zones to project which side you're going to trade, and how you can use the market profile, which is the roadmap, to show these big gaps. And there you go. Look at these big tradable gaps. Got another one below here, 32 1/4 down to 80. Right? What traders like to do, though, is they like to keep trying to catch the falling knife. It can't go any lower. It can't go any lower. Yeah? Well, it can go lower. You're shorting low here and covering lower. You're shorting low here and covering lower. You're shorting low here and covering lower. Why? There's no support. There's no support. Out of all these thousands and thousands of indicators out there, it doesn't matter because they're lagging indicators. You know, the Fibonacci's and the pivot levels and this and that. It just, they can't hold the market up. The market looks for fair value. It's trying to find fair value. It's trying to find out where the previous market participation was. Where's that? Market profile. That's how we trade these tradable gaps. And since we know that the market's trying to get down to 32.5, you just keep shorting these retracement zones until we get down to that level.